Disney seeks patent for humanoid robot that can play a character. Could costumed robots one day roam the streets of Walt Disney World? A new patent application from Disney, DIS, suggests something that the company has considered. The document says Disney is developing robots, including humanoid robots that have been adapted for soft contact and or interaction with humans. To physically interact with children, the filing says the inventors understood that the robot should be soft and durable. The patent application says Disney has already created a small toy-sized human-looking prototype which was made via 3D printing and encased in soft material, and it was likely based on a famed Disney character. This robot's style and other motions were modeled after a given animated character, example a character from an animated film or television show. The patent application says Disney declined to comment on the patent, and there is no word on when or if the company will actually put the robot to work at its parks. Seven tax misunderstandings that could cost you. While we can never know everything, there are times when ignorance can cost you dearly, and tax season is one of those times. Here are 7 tax misunderstandings Americans should clear up immediately. A pile of little papers on which are written words such as tax return, tax audit, tax advice, and the many simply have big question marks on them. You shouldn't necessarily want a fat tax refund. For starters, while it's wonderful to get a hefty paycheck from Uncle Sam after filing your tax return, that's not really such a great thing. After all, it's technically your own money that you getting back, and the government has been hanging on to it until you filed your return. Modest refunds are common and not a problem, but big refunds generally happen when we have too much withheld from our paychecks. You can adjust your withholding by submitting another W-4 form to your employer. Tax credits are more valuable than tax deductions. Tax credits and deductions aren't the same thing. Both offer tax breaks, but tax credits are more powerful. A deduction reduces your taxable income. Have gross income of $70,000 and a $4,000 deduction, your taxable income is now $66,000. If you're in the 25% tax bracket, you avoid being taxed on that $4,000 and save $1,000. If you have taxable income of $70,000 and a tax credit of $4,000, however, The credit reduces your tax dollar for dollar. It's worth a full $4,000. Credits are available for all kinds of things such as education expenses, the adoption of children, and the care of children and dependents. A particularly valuable credit, if your income is low enough to qualify, is the Earned Income Tax Credit, which might shrink your taxable income by more than $6,000. The Child and Dependent Care Credit offers a credit of up to $3,000 for the care of one eligible dependent and up to $6,000 total for two or more. You do have to report all your income. It can be easy to think that you only have to report income to the IRS that you get documentation for in the mail, for such via a W-2 form or a 1099 form. Not true. You need to report all income, from retail income to prize money to gambling winnings. If you get paid in cash or some or all of the work you do, that too needs to be reported. You should report all income because it's the right thing to do, but also because the IRS may already know about some income you're not reporting, and it will wonder why you're not reporting it. After all, entities that pay you will very often be reporting that expense to the IRS. You can't get an extension for paying your taxes. Many people misunderstand the nature of a tax extension. When you file IRS Form 4868 for an extension, you are only postponing the filing of your return. You can't postpone paying the taxes that are due. That might sound tricky, as you may know exactly how much you owe if you haven't yet completed your tax return. But the IRS expects you to make a good faith estimate and pay the amount. If you think the total taxes due will be around $15,000 and $12,000 was withheld by your employer, you would send in the difference, which is $3,000. The IRS imposes penalties for filing a late return and for paying taxes late. Penalties can be as much as 25% of the tax owed and the unpaid tax, even if you can't file the return. And if you can pay at least some of what you owe, do so to minimize the penalty hit. You can reduce your chances of being audited. Your chances of being audited are very low and recently less than 1 in 100. Don't think it's all a matter of chance, though, because there are factors that can make an audit more likely. For example, if you have earnings that are well above average, you will be more likely to have your return audited. If you're self-employed, you'll be more likely to be audited as well, because it can be easier for a self-employed person to fudge numbers than it is for a salaried person. Factors more under your control that can keep your audit odds low include being neat and legible when filing out your return, reporting all income on it, including all dividends and interest that's reported on 1099 forms, and not having math errors on it that will draw attention of the IRS. If you report having no income at all, the IRS might question that, which is not a problem if you really did have no income. It may also question bigger than usual deductions such as charitable donations or business expenses. Again, such deductions might get you audited, but they won't cause much trouble if they're legit and you have documentation to back them up. You have rights as a taxpayer. You might feel powerless against the IRS, but you do have rights. There is a taxpayer bill of rights that was adopted by the IRS in 2014, assuring us the right to be informed, the right to quality service, and the right to pay no more than the correct amount of tax, that the right to challenge the IRS, among others. There's even a taxpayer advocate service headed by our national taxpayer advocate, Nina Olson. Ms. Olson regularly informs Congress of problems she sees in our tax system and makes recommendations for fixing them. Her office also helps thousands of taxpayers with various problems every year. The IRS will not phone you. Finally, the IRS is never going to call you out of the blue, and it won't send you unsolicited email either. If you receive a phone call, as many people have, from someone saying they're with the IRS and that they need you to make a payment immediately, or they need your social security number or bank account or credit card numbers, don't believe them. There are many tax scams out there bilking taxpayers out of the money. Getting your personal information can help a scammer engage in identity theft. Filing a tax return in your name and collecting a refund, the IRS is aware of and has been tackling this problem, and in fiscal year 2015 initiated 776 identity theft related investigations, resulting in 774 sentencings. Working behind the scenes in the first 9 months of 2016 reduced the number of people who filed affidavits with the IRS saying they were victims of identity theft by almost half compared to 2015, with affidavits dropping from 512,278 to 237,750. Still be warned and be wary. Be savvy about the IRS and how tax system works, and you can save yourself headaches and possibly hundreds of thousands of dollars.